Our goal is to break the power of the mob in America and nothing short of it. We mean to end their profits, imprison their members, and cripple their organization. Imprison their members and cripple their organization. Cripple their organization. Imprison their members. Our goal, break the power of the mob.
Hello, hello, hello. What's going on again, world? I have returned with more ADH Wealth Solutions. So something that's been going on that I've noticed when I'm dealing with a lot of clientele is there's a huge miseducation on the fact that life insurance is not all created equal. And there is a drastic difference even in the application process. So people will go through an application and from company to company or policy to policy, there can be a huge variant in what the parameters are to even qualify for a specific type of policy. It's not like going to Walmart and saying, hey, I need some, Q-tips, and then they just give you, some Q-tips, or hey, I need some tissue, and they give you Kleenex. Tissue is all created the same, but it's different when you're looking at something like life insurance because there's different bells and whistles for each policy. It's like going to the car dealership and saying, hey, I want a Benz. Well, they're like, well, we're a Benz dealership. Which Benz do you want? There's a multitude of them. So bear with me here. I'm going to go ahead and share this screen to us. And I'm going to be sharing multiple screens. And the reason being is because there are a lot of screens that I'm going to have to go back and forth between. So I'll do it like this. We'll go here and we'll start with the easiest. Okay. Now, this is a Gerber life insurance policy application. And if you'll notice, the most you can apply for is $25,000 with Gerber. And this is because this is a guaranteed life application. So what that means is this is the Alex Trebek where people don't need to ask or answer any health questions. You can almost be on your deathbed and get this policy. You'll see it's basically just asking, who the beneficiary is, how much you're applying for, and that's it. Okay. Now, this would be, again, a guaranteed issue. So this is a policy that you see on Colonial Penn commercials. Oh, yeah, $9.95 per month. Now, this is something a little more robust. As you'll see, this one is as well for a whole life guaranteed or a guaranteed issue, very similar to this. But this is a simplified issue. If you'll notice, it says whole life express, whole life guaranteed. So the difference is this is guaranteed issue. There's pretty much no way they can decline you for this policy as long as you qualify. So qualifications for a policy like this, again, a maximum of $25,000 is your death benefit. And you're usually going to be between 50 and 80 years old. If you're younger than that, you won't qualify for this type of policy. You may be younger and still have maybe not the best health. So maybe you need a simplified issue policy. So that would be something like this. Now I have to go fairly swift because this is an actual application that was filled out by a person. So I don't want any of their information there. But if you'll notice some of the questions, to the best of your knowledge and belief, has the proposed insured ever been diagnosed with AIDS, HIV, or AIDS-related complex? Have you ever been bedridden, using a wheelchair? It has questions about the last 6 months. Have you required the assistance of another person for activities of daily living? Have you received or been advised to receive any of the following: health care in a nursing home, assisted living facility, or daycare? Okay, it takes a long time to apply for life insurance because not only is it you saying, hey, I want to protect myself by this money, but the insurance company wants to make sure that you're worth their while giving you this money. So if we'll look here, again, it's asking a host of questions in section B. Has a proposed insured ever received treatment for or been advised by a physician or healthcare provider to seek treatment for all this host of diseases, which is heart issues, coronary artery disease, heart attack, coronary artery bypass surgery, angioplasty, a stent, valvular heart disease, a replacement, cardiomyopathy, congenital heart disease, stroke, or cerebral or symptomatic aneurysm. Chronic lung disease, except mild asthma, chronic bronchitis, emphysema, sarcoidosis, or cystic fibrosis. Bipolar depression, schizophrenia, Alzheimer's disease, dementia, Parkinson's disease, demyelinating disease, including multiple sclerosis, Huntington's disease, hydrocephalus, quadriplegia, paraplegia, Down syndrome, autism, mental or developmental abnormality, or any other disease of the central nervous system. Chronic kidney disease, end-stage renal disease with dialysis, or liver disease, including cirrhosis, hepatitis B or C. Diabetes with onset before the age of 50, or vascular or renal complications. Have you ever had an organ transplant? Systemic lupus, scleroderma, or other connective tissue disease? Okay, answering yes to some of these may or may not disqualify you for this type of policy, and it may or may not disqualify you for something called fully underwritten. This is simplified underwriting. So this means that the insurance company is not delving all the way into your business. And you see, there's quite a few different things I've asked already. So now let's ask again. Notice this one says ever. Here it says in the past 10 years, have you ever been treated or advised to get treatment for alcoholism or substance abuse? Because that can get you declined for your life insurance. Have you been convicted of driving under the influence of drug and alcohol, or been convicted of reckless driving, or had 4 more driving violations? A yes answer can likely disbar you from life insurance. Been convicted of a felony? A yes answer will likely get you declined for life insurance. Been hospitalized for high blood pressure or any mental or nervous disorder. Been treated or advised to be treated for cancer, leukemia, melanoma, or any other internal cancer except basal cell skin cancer. In the next 2 years, will the proposed insured engage in any motorsports, racing activities, boat racing, parachuting, hang gliding, rock or mountain climbing, or skydiving? In the past 12 months, has the proposed insured been advised by a physician to have a surgical operation, diagnostic testing, other than for routine screening purposes, treatment, or other procedure which has not been done? And in the past 12 months, has the proposed insured consulted a physician for a chronic cough, unexplained weight loss, fatigue, or unexplained gastrointestinal bleeding? If you'll see here, the rest of that I'm not going to show because that's that person's information. Let me actually go here. And if you look here, here's another type of an application. Now, this is a fully written application or fully underwritten. And if you'll notice, there's a multitude of products. You'll see 1, 2, 3, 4, 5, 6. There's 6 products that you can actually apply for with this type of a product. Okay. There are obviously, there's the main information that you're going to collect. This is actually a policy I wrote on myself. Now, if you'll notice, there's even further questions. So, in a fully underwritten policy, have you or any other person proposed for insurance been offered cash or any other consideration for obtaining this policy? Right? You can literally have been bribed to purchase a life insurance policy. So this is a financial product. People think of life insurance as just a check for when you die. It is actually a financial product. Okay. Are you or any proposed insured planning to enter into a finance agreement to pay any premium payments due under this policy? Do you or any proposed person for insurance intend to sell or transfer ownership to a third party in the next 5 years? Or have you sold or transferred ownership of a policy to a third party in the last 5 years? So I hear a lot of people who talk about companies buying their life insurance policy. That's actually legal. It's something called stranger-owned life insurance. And companies do it still. There's a kind of a loophole they're looking at, but you're not technically supposed to do it. So then it'll say list below all life insurance policies and or annuity contracts on the person proposed for insurance that have terminated in the last 13 months, are now in force, including any that have been assigned or sold, or that are now pending. This includes any life insurance policies and or annuity contracts under a binding or conditional receipt. Meaning if you applied for another policy somewhere else and they're still waiting, we want to know about it over here. Has any person proposed for insurance had or intended to have any life insurance policies or annuity contracts replaced, converted, reduced, reissued, sold, subjected to borrowing, or otherwise discontinued because of this application? Now, if you were to say yes, there's other things that happen here, like a 1035 exchange, which is a tax-free rollover of the funds that you had built into that annuity or insurance account. And now you'd roll them over into this financial instrument. Okay, so now we're looking at, again, the health condition. And right off the back, it says, are the persons proposed for insurance citizens of the United States? Has any person proposed for insurance used any form of tobacco or any form of nicotine replacement therapy? I said yes, because I was a current smoker at the time, smoking 4 cigarettes a day. Has any person proposed for insurance? If answered yes, please list the details in the comment sections. Had life insurance coverage declined, postponed, or limited, or been denied reinstatement or asked to pay extra premium by any insurance company? So if you get declined by one company, don't think you're going to go lie to the next company. There's something called the Medical Information Bureau. And if you click no here, like I did, lying to the company, they're going to look at the MIB. And then as soon as they see, oh, you got declined, they don't care what you got declined for. They're going to automatically decline you. Engaged in any hazardous sports or activities within the last 3 years, such as motorsports racing, boat racing, parachuting, hang gliding, rock or mountain climbing, skydiving, skin diving, scuba diving, cliff diving, base jumping, bungee jumping, or plan on participating in such activity in the next 2 years. The reason for that is because of how much risk you are. Any intention of traveling or living outside of the United States or Canada inside of the next 2 years. If so, there's differences because certain policies only pay on U.S. soil. A lot of people are concerned because they get life insurance from their job and they never have to go through any of this, is because the life insurance from your job is a group term policy, and it's literally, they understand the risk and they realize that the likelihood that 90% of the people who have the job policy never use it. So the company's just getting paid. So they don't care or really concern themselves with the risk. Even people who die and have their job policies, it never gets turned in because their family doesn't quite understand how to get those funds. So within the last 5 years, have you been convicted of 2 or more moving violations, been convicted of driving under the influence of alcohol or drugs, or had a driver's license suspended or revoked? Guess what? That all has an effect on if the insurance company will insure you. Have you ever been convicted of a felony? Notice that's ever. Been on probation within the last 12 months or are currently on probation? Has any person proposed for insurance ever filed for bankruptcy? Why are they asking questions about your finances if all life insurance is a death benefit check? Because life insurance is an alternative investment and it beats just about every other quote unquote investment product, even though you can't call life insurance an investment because it's not. It's better than an investment. It's life insurance. Okay, they're going to ask further about your finances. Has any proposed person filed for bankruptcy? What is the purpose of this insurance? So income replacement, mortgage protection. If you're applying for $500,000 or more, they want to know about your assets. Okay, and then they're going to look at your family health history here. Again, this is fully underwritten. Now, you noticed on this one, they didn't even ask any of that stuff. And on this one, they asked even less. But this is fully underwritten. Okay, this is likely you're going to build cash from this. Okay, it'll ask, does any person proposed for insurance have a personal physician? You'll have your doctor's information there. Has any person proposed for insurance? Well, a lot of these questions are the questions that we just asked on this. But if you'll notice, there's even more questions, okay, because they're going a little deeper. Okay, but a lot of these questions are the same. Now it's asking, in the past 2 years, has this person been prescribed any medications? Okay, and then they'll have you write an explanation about it, and then the rest of this is the producer's report. So the rest of that isn't terribly important. Okay, I'm going to go ahead and stop the screen. What's going on, brother? I'm going to go ahead and actually try and invite and allow people to come up, because sometimes you may want to ask questions. And I've noticed that, it's easier to ask questions in live time than it is sometimes to ask questions, in a chat. So this one was pretty short, realistically, because I just wanted to show people that there are differences in all life insurance is not created the same. And even applying for the policy is vastly different, simply because, there are just so many different things to see. Bear with me one moment. We have a guest. Sheed, we here. I'll go ahead and let you get your statements in.
What's going on, Lonzo, man? I'm just, like I said, I'm very much interested in it. My standing on my policies and which I have. So, like I said, every time you drop a video, man, I'm always motivated to actually come on here and learn more.
Definitely, brother. That's my whole goal. Oh, hold on. My wife is coming with some pie filling for me to taste. Thank you, babe. Uh-huh. Mm-hmm. Give me the spoon. Sorry, brother. Yeah, my grandma gonna like that. That's good. Thank you. No, it doesn't need anything, but I'm on live, so.
Sorry.
Uh-huh.
Good job, bro.
I know, I got to taste the pie. I got to listen. My kitchen right now, y'all. My house smells so damn good. My wife just brought me a spoonful of this pie filling, because she be making sweet potato pies. But yeah, she definitely, if ever you have questions and things, definitely in terms of your policies, I'd love to do a policy review. I do offer policy reviews for free because oftentimes people don't know quite what they have. And it's very important for you to know what it is that you have. For example, if I go back, I was just showing you guys applications for life insurance. Okay. Now there are other products that I can show you. For example, I'm going to do a video in the next few days. I may do one tomorrow on Thanksgiving, showing how you can, instead of wasting money on your 401k at your job, you can literally put that same money in a life insurance policy and fund your retirement through your life insurance policy. It's that simple, in and out. So I'll go ahead and let you speak, brother.
No, like I said, man, I had to just tell one of my friends. I told him, I was like, just come on over here. I was like, I can't talk to you right now, but just come on over to the channel. And I told him, listen to me in the chat. But basically, like I said, this one of my friends I just told to come over. He always get on me and laugh at me about having a policy that I have so many policies that I actually and paying like a car note every month for my policies. And like I always tell him, I'm kind of building the legacy for my kids, to where if something happens to me, I'm good and they well taken care of. And a lot of people don't realize that, man, even with the policy, put on the seatbelt, even with the policy that I have now, I'm still wanting more policies. That's why I said I'm trying to see how I can work this out because I have family members up in New York. I'm gonna see if I can get one of them to implement a policy up under my kids or something like that. And so you can actually get the credit for the policy if I do get it up there.
Yeah, listen, brother, I'm licensed currently in 5 states, so no matter what state you're in, I can definitely help you out there. The only
Okay.
state that might be difficult for me to get my license in is California, but I'm licensed in the great state of New York, which allows me to pretty much go and slap my cards on the table anywhere and say, hey, we run in this show. Now, to your friend who's clowning about paying a car note in life insurance policies or premiums, I understand why he's clowning, and I'll explain to you exactly
Now
why.
you're not really clowning me. He just more or less just saying that I'm that dedicated. That's
Oh,
how he's coming at me.
okay.
Yeah.
So not clowning, but yes, you are that dedicated, and that's what I was gonna say. In terms of being that dedicated, the beauty of it is you're doing this because your life policies, if they get set up properly, you're gonna have lots and lots of money. So let me see if I can show you real quick. I'm going to do something here, and pull something up real quick. So bear with me 1 second. And one of the things that you mentioned is that you do have a multitude of policies, right? So here's the cool thing about that. Those policies, if they're permanent life insurance, are building some form of cash value. So eventually, it's almost like you're being paid to have the insurance. I'm changing a client of mine's name only because I like to protect the innocent. So his name right now is going to be LeBron James because we all know LeBron James. This person was born June 5th, 1990. So he's 30 years old. I'm sorry, July 5th, 1990. So he's 30 years old. Okay. Now, bear with me because I'm going to show you. I'm actually going to be showing you guys what an illustration looks like or what someone working on your life insurance looks like.
Okay.
Chrome tab. Let me just do the entire screen. It's much easier that way. Okay. So do I need to enlarge this or can you see it well?
That's pretty good. I can see it.
Oh. All right, I'll enlarge it a little bit anyway. Okay. So if you'll notice, it says LeBron James Jr., which obviously isn't the actual client, but let's say he's applying for $1 million worth of life insurance. 100,000. Hold on. $1 million worth of life insurance. Okay. Now we're gonna put we'll put monthly, and we are going to put based on the percentage of target premium. Okay. So this will tell us based on what he's applying for. Now, you'll notice here it says indexed and universal life. There's a boatload of different products here. I'm going to start with the indexed and universal life, and I'm going to start with the growth index UL. So now this type of a policy is something that's attached to the S&P 500. Okay, so this is attached to the stock market already. So why go to the stock market and face all that volatility when I can kind of mirror the stock market and face none of the volatility, have guaranteed growth, and if something happens, my family gets the money tax-free, right? It seems pretty beneficial, right? So now if I preview this, close some of these windows. Okay. Now, if you'll notice here, it says Growth Index UL provides protection, interest accumulation potential linked in part to equity indexes, and a guaranteed lifetime income. Did you know your life insurance could do any of that for you?
Yeah, for the one I got, I actually have the index one that goes off the S&P 500. That was the latest one I just got.
Okay. So now let me ask you this. Does your policy have living benefits?
And see, that's the thing I don't know quite sure with the policy. I haven't actually got a policy review and everything because
Okay.
I actually got the policy through a class dealing with stock and life insurance.
Mm-hmm.
And the guy, he pretty much represented, showed us how everything works. He worked with a company, Liberty, and they kind of set us up with the policy. And he pretty much told me the ins and outs of it and gave me the paperwork. And I actually get updates on the policy about the money and everything. I think it's like every 2 to 3 months and everything.
It sounds like you have what's called a participating policy, which means that it pays dividends.
Yeah.
Now this one for this guy, again, age 30. Now again, I'm gonna flip your mind because now you're gonna end up doing a review with me. I already know because I'm about to blow your mind. So right here, again, this 30-year-old is almost paying $665. But again, that's $1 million worth of life insurance. He also has these living benefits. So if he gets a critical illness while he's alive, he can access 25% of this $1 million day one. It's $250,000. If he gets a chronic illness, he can access 50% of this $1 million day one. That's $500,000. If he has a terminal illness, that means you're going to die within 12 months. He can access 75% of the money. He just needs to leave enough there to be buried. Okay, and this will actually explain to you the specifics of what a terminal or a chronic illness is. Terminal illness, the presence of an illness or a condition where life expectancy does not exceed 12 months. A chronic illness is activities of daily living, which is dressing, eating, bathing, toileting, transference, or continence. And then a critical illness would be, stroke, kidney failure, blindness due to diabetes, if you lose a limb, things like that. Okay. Now, going further down, there's a lot of information in these policies. Most of the time, people don't read it. So this is what you really want to look at, right? So again, this particular policy is not set up to build cash value. I'm going to show you how to build cash value in a policy, but I just want you to see some of what's going on here. So if you'll notice, usually the first 5 years, you don't even build any cash value. If you'll notice here, you'll see guaranteed policy values, okay? Whenever you're looking at a life insurance illustration, never look at the guaranteed values. Guaranteed is a guarantee of the money that will happen to be available to you if coronavirus was true and everybody who had life insurance with this company died on the same day and put in a claim. That will never happen. Okay. The alternate scale, okay, when you're looking at something that's tied to an indice, you're looking here at this 4.35% compound interest. Remember, I always yell about compound interest. So what that means is for every $100 you're putting in this policy, every month it's growing from $100 to $104.35. On the flip side, if you put your money in Chase Bank or Bank of America or Wachovia or Shawmut or Santander Bank, you're getting 0.075% APR. So you're putting $100 into the bank and waiting a year for them to give you 75 cents. Would you rather wait a year for 75 cents or a month for $4?
Hey, no brainer, a month for $4.
Right? So now I'm going to flip it over here because this is current interest rates. So this is what's going on as of today, as of me clicking that button that said preview. And their current interest rate is 6.4%. So what that means is this here is for if the stock market crashes. You're going to have a floor of 4.35%. If it goes up, your ceiling does increase above the 6%, but right now you're growing at 6.4%. So that same $100, instead of $4.35, You put that same $100. Next month, you got $106.40. Now, does that sound attractive?
Yeah, right on the money.
All right. So, and I know you like this because, like you said, you want to get to that money. So, if you'll notice here now, this isn't even fully funding it. I'm going to show you how to fully fund it in a second. Here, you paid $79,700 out of pocket, right? Over the course of 10 years. However, you've actually only paid $20,000 because you have cash surrender value or cash accumulation value. See, the cash account value is what you have to borrow against. If you want to borrow money, go to the bank. If you're going to take this money and extract it, you would cancel the policy. Now, at this point, you'd be at a loss because you paid basically $20,000 into the policy, but you have, well, you paid $79,000, but because you have $56,000 of liquid capital, you technically only paid $23,000. Does that make sense?
Kind of lost me on a little bit. You repeat that again?
No problem. Yep, I'm gonna see if I can pull up a calculator. Hold on. I'm gonna show you. Easiest way to do it is like this. You got too much bandwidth going on, huh? Okay.
Yeah.
So we have, I got too much bandwidth going on. 56. Oh, hold on. Wait. You paid in, right? 79,700. Nope. What the heck? Okay. What the clear. There we go. 79700. Right. That's 79,700. That's what you paid in. Now we're gonna subtract 56066. That's the cash value that's available to you. So literally, you only paid $23,000 for this $1 million of life insurance over the course of 10 years. Because the $79,000 that actually came out of your pocket that you paid to the company, of that, $56,000 was put to the side as cash for you. Does that make sense?
Okay, yeah, I get it now.
Okay. So technically, you only paid $23,000 for $1 million worth of life insurance. Now, if we continue going, let's say you keep it for 20 years. So after 20 years, you paid $159,000 into the policy. All right? So let's do it like this. 159,401, right? But let's subtract 203,313 because that's the cash value that's accumulated. Wait, you mean you got paid $43,912? That's why it's negative here, right? You paid in 159,401. The insurance company now has built for you 203,313. So in essence, they're paying you for having life insurance.
Yeah.
Does that make sense?
Yeah, dude. I mean, I looked into the actual agreement, and basically they were telling me, like, if I live to be, I think it was 30 years from now, so around almost close to 70, that the policy would be done paid out almost 5,000 or something like that over the course of time. And just that's just a rough estimate. Dealing with the market and the way it is now and the interest rate, it'll be close to that. But the guy was explaining to me, he said, boiling down, that it'll technically go over that. That's just a rough estimate because no one knows how the market's gonna go. But basically, the way the market is at the value it is right now, that's just a rough estimate of what I'll be dealing with.
Here's the beauty: the market has no effect on your life insurance. Almost, it's just gonna continue to grow. So now I want to show you something else here. We're going to do this indexed, right? So, oh shit, no. Okay, actually, I don't want to modify that yet. Let's go maximum. So we're going to go to the maximum that you would be able to fund this without it being a modified endowment contract. Now, one thing I wanted you to notice was that was a level death benefit. So you see here where it says option A, B, C. We're going to go with option B. So what insurance is an aleatory contract. So most companies start you with option A, and that's favorable to the insurance company. Why? The insurance company is, as you're building all this cash value, right? They're on the hook for this $1 million, right? So let's say day one, you have $0 in cash value. Well, that's $1 million that the insurance company has to come up with. Now, let's say you're at this point, you're 20 years in, and you have $200,000 in the account value, right? And then you get hit by a bus. Well, the insurance company only has to come out of their pocket $800,000 because the other $200,000 is something that you built up for your family. Well, that's not fair to you, is it? So let's see. The insurance company understands that. So they make a different product. They make option B, which is an increasing death benefit. Okay. So an increasing death benefit, actually, I'm just going to put this at percent of target for now so that we can compare apples to apples. So this is an increasing death benefit. Okay. And again, I haven't even done this to be bells and whistles. I'm just doing 100% of the target. The target is just so that you can have the life insurance and it doesn't lapse on you. Okay. So again, it's going to be the same bells and whistles. We're going to go down here. Now, this one, again, is the $664.17 a month, right? But if you'll notice something different, remember here, it just stayed $1 million because you're on a level death benefit. So this one is a little more expensive, but you're on an increasing death benefit. So as you're going and you're building this cash value, because if you'll notice here, you're $3,000 less in cash value than the prior. The prior you had $203,000, and that's a big difference. Those are types of things you want to notice when you're looking at your money. Now, you've still spent the same $159,000 over the course of that time, but you only got $200,000 built up. But God forbid you got hit by a bus instead of just $1 million, because you built up $200,000 worth of cash value, the insurance company is still on the hook for that $1 million, no matter how much cash you build. So, boom, your family get $1.2 million. Now, I noticed you said something about until the age of 70, and we know BGS is, I just found out he's in his 60s, right? So let's say you wait till you're 66, which is 30 years, right? You about my age, right? 36, 38?
Yep, 38.
Okay. So let's say, right? Well, this person is 30 that we're illustrating, but if he waits till age 68, he's got $783,000 of cash that's available to him. Now, if he waits till he's 70, he's paid in $308,000, but he's got $887,000 worth of cash value. Is that a nice retirement account that you could just take and put into an IRA?
Pretty much. Yep.
Yeah. So what you do is you forget the 401k and all that. I mean, I still recommend getting it because multiple streams of income is more important. But truly, you only need a life insurance policy to do everything. That's why they call it life insurance, because it takes into account everything that happens in life. That's why I love this, brother. I'd love to set an appointment with you and actually do, because I don't want people to see your actual numbers. So when we would do this, it would definitely be very similar. But I'd have to ask you some questions and find out some things about you as well, and about your goals. But I don't like to do those on live because nobody needs to know your personal stuff. You know what I mean?
Yeah, I understand that.
But so now that you're here, I'm gonna have some fun with you. So just know you locked in, brother. Now that you're here, I got the chance to have some fun with you. So we're gonna go maximum here, right? So the maximum funding that you could fund a policy is this is what I like to call overfunding the IUL. So you hear a lot of financial professionals who hate index universal life, and they love investments because they love to charge you the investment fee. Who just texted me? Oh, he trying to see if we doing Thanksgiving dinner. Nah, bro. Hold on 1 second. Nah, bro. We're just. That's my brother-in-law. He recently moved here to Connecticut, so he's trying to probably figure out what he's doing for Thanksgiving. But I'm like, yeah, we ain't doing nothing for Thanksgiving this year. So again, this is an option B, death benefit. Now, if you'll notice, this is way more expensive. It's almost $2,000 a month, right? $1,942.69. But this is maximizing the cash value. If you'll notice, for example, here, like I said, you really don't build cash value in the life policy for the first 5 years, right? So if you'll notice here, net account values is about $4,000, but the cash surrender value, that's what you really want to look at, is the cash surrender value. The net account value is what you can borrow. We'll see. I doubt we're hitting the road. But I know he's also about to move, so I know he probably gonna want to spend the last few chances we have to spend with the bros. So if you'll notice here, you've got $0 in surrender value. The account value is what is able to be borrowed against, but the surrender value is what you can actually take if you cancel the policy. Okay, so notice you're paying $664 here. And no, I'm not done recording. Nope, still live. If you'll notice here, however, immediately there's cash surrender value, right? Now, in this one, again, this is what, if you've heard of like companies called Prime America, where they say things like buy term and invest the rest. This is not what they mean. But this is what, yes, I am on StreamYard. This is what a investment really looks like, right? Buy term and invest the rest. So again, it's with an increasing death benefit. You're paying $23,000 a year. The first year you paid $23,000. Yes, you have a little bit of a loss because your net account value is only $19,000 and your surrender value is only $3,000. So they make it painful in the first few years to cancel the policy. But if you'll notice, after 10 years, right? So from age 31 to 40, and the reason I say this is because I'm looking at so many brothers who are here in the manosphere who are in their early 40s. But imagine if they did this in their 20s, right? So you paid $233,000 in, and you've got almost $260,000 that you can cash out. So you're already being paid for having that policy. Here. So if we were to look at, hold on here. It's my back office. So when you're looking at, again, let's take a look at this in the 60s. So age 70, right? Is if you just hold this till age 70, you've paid nearly $1 million, right? Think that's a lot of money, but if you look over the course of time, $1 million is only $50,000 a year for 20 years. But if you decide to cash out at 70, you've almost got $4 million. You quadrupled your money, right? So there's no reason to not use life insurance as an alternative investment, because it is. It's better than an investment because it protects you in the event that, okay, while I'm building all this cash up, if I die, my family's taken care of. The purpose of this is not for me to die, but if I do die, I know that I got my people's gonna be good. But if I don't die, which I don't intend on dying, I'm gonna be good. Right? So that's the whole goal here, is for us to make sure that we're good on that end. Let me see here. Let me let everybody know they can join in with questions. Okay. So my man Chronicle said apparently we're breaking up a little bit. I do apologize. Good evening, Kareem and Willie Mays. What's going on? Right now, we're just talking about, isn't all life insurance the same? Which it isn't. If you'll notice earlier, I went over some different types of applications, and there's different types of questions that are going to be on every application, from a simplified or a guaranteed issue all the way to something fully underwritten. Now, let me ask you something, Sheed. When you applied for your policy, did they send a nurse or a clinician to come take blood, urine, and an oral swab?
When I got my, what was it? My first whole life they did, and with the second one, I think I actually went to a lab. I went to a lab and they did it.
Okay. So yeah, that's another thing that people are you're going to apply for the life policy, right? And just because you apply, all things are not equal. So prime example, you and I are around the same age. We're both, in our 30s, late 30s, 38, and both around the same size, height, weight. Problem is, if we don't have that same health, even though we're the same height, weight, age, everything else, my health might cause my policy to be 10 times more expensive than yours. My family health history may cause my policy to be 10 times more expensive than yours. Okay. Prime example, my father, his parents died before he was 16 from heart disease. So heart disease runs rampant in my family. So when I apply for life insurance, they're going to ask, have your parents or grandparents died before the age of 65? And when I answer yes, that's going to change their determination on how willing they are to give me the insurance, or how much, how much risk they're willing to take. So they may be willing to take that risk, but that risk is going to cost me more dollars out of my pocket than it would you. I have a friend who last year he applied for he applied for $750K. We applied as standard. When the insurance company saw it and they took a look at his health records and they took a look at his doctor's records, they decreased the price from $120 to $93. And then they told him, hey, why don't you get more insurance? Because we just took your price down $30. So use that $30 and get more insurance. The insurance companies like that, right? Did you know you can use your life insurance policy as like a walking loan? Once you have cash value, you can go to the bank and say, hey, give me money based on this life insurance policy. You're guaranteed to get your money back. It's collateral, because if I die.
Yeah. No, I was going to say, can you hear me? Yeah, no, I was going to say, I do. I did know about that and everything. That was one of my reasons for always getting whole life. When I actually got the term life, they was giving me such a good deal and everything, which I know most of the time they give you term life and their whole goal is to actually get you in the mindset of going to whole life from term life. Because I had a guy I know, he used to work for I think it was like Prime America, and that was their whole gimmick of selling people term life and ultimately getting them universal or index life. After a while, you went from term life, you take the money that you had invested into the term life and you move it up to whole life. Then you take the whole life and you move it up to the index or the universal life. And basically, that's how they would go about selling the insurance to people. Because most of the people, when they try to come at them with the policy going into like whole life or universal, everybody always would tell them it's too expensive. But there were some people that knew more about it that can kind of, skip the line by going straight over there versus going through the small here, here, here. Ultimately, when they start getting older and they seen the money and they start seeing the more it was beneficial for them to get that policy, that's when they actually start moving around and actually start trying to pursue it.
Nice. Yeah, I think that is one of the things, and I think it's important that we realize that there is money attached to this. All too often, people are just taught, it's a check for when you die, and that's it. And unfortunately, that I can see why somebody be like, it's too expensive. I'm not going to waste all this money for I could be using that on something I want to do right now versus anything else. And what happens is that person then misses out on the benefits of a policy like this. I'll give you an example. My grandmother, she came into a lump sum of money from a lawsuit. And my goal was, Grandma, let me help you with an annuity. Unfortunately, she's like many Black old elder people who, when they come into some money, she gave me $1,000. She gave my cousins $1,000. At the end of the day, she ended up actually paying for a bunch of people to come to my wedding. I had a destination wedding in Vegas. So she ended up paying for like half the family to come to my wedding, which I was pissed about because now she's 81 years old. And what I told her was, don't give me or anyone any of this money because you need to live for you. We have to realize that people are living longer. See, there used to be a time where you would die at 64, 65. But especially people in our age range, brother, SSI ain't really going to be there for us because the millennials aren't, or the zennials aren't working in the same way or paying into the tax force the same way. They're learning tax loopholes and they're saving their money. And so what ends up happening is we're paying for retirement, but people's living longer. So right now, my grandmother's 81. I have another elderly lady in my family who's 106 years old. Well, these people are taking away from my Social Security so that when I get to that age, I can't live comfortably. So what do? We privatize and create our own retirement. So tomorrow I'll be doing a video on how to use that life insurance policy, how to take this, what is it? Is this the one with 8 mil? Yeah. So how to go ahead and get to 70, take this nearly $4 million and put it into a policy where you can retire. Because again, as a licensed life insurance agent, the products that I can offer you are more than just a life insurance policy. I mean, as you see here, bro, the life insurance policy was showing you some robust way. Did you think you could get $4 million out of your life insurance?
I mean, over time, probably, but I don't to be honest, nah, I don't think I can see it because, depending on the age now and the way people live, you know, there's a possibility something could happen to me. But if I were to make it to that age, I would definitely take that money and put it into something else and flip it. I mean, even considering me taking half of the money and reinvesting it back into a policy, taking the other half and kind of more or less buying property and buying things that I know can actually bring me more money in, even getting rental properties. I would actually buy apartment complex. If I make it to 70 years old, I buy apartment complex for my kids. And I just, get the money, and as time go on, they can reap the benefits of having it. And like I said, the other half of the money, I take it and invest it in something else.
Yeah, I think that's definitely a great way to go. I would talk to you about that further in terms of your goals and what you're trying to reach there. I think that's a great, way to actually have things happen is to just sit there and, especially in the manosphere. I'm definitely going to try and break things down in the Black manosphere here because for Black men, we don't get taught this type of stuff. So what I implore all of you gentlemen and ladies who may be watching or listening now and or in the future is, especially in the Black community, when like a financial professional like myself comes into your house, grab your kids and make your kids sit right next to you so they learn this. Because I'll give you an example. My mother didn't learn this stuff. So now I at 36 have to learn this stuff, right? I'm sure a lot of our parents didn't learn this stuff. So us in our 30s and our 40s are bumping our heads trying to figure it out. So let's go ahead and make sure that while we give our kids everything that we didn't have and we buy them the new PlayStation 5, and I implore you to buy them the new PlayStation 5, the new Xbox, the new Nintendo, all of it. but make sure that while you give them the trinkets you didn't have, that you also give them the education and the knowledge that we didn't have. And
Yeah,
so
because
here,
well, I was just gonna go ahead and say this real quick. I was like, when it comes down to it, I always tell people a lot of the knowledge dies off with the generation, you know, because a lot of kids, when you're young growing in, you're not listening to your parents when they tell you to do things with your money, you know, because you want to have fun. And as time go on, you get invested into yourself. That's when you understand like the the, the choices that you made in the past make greater impacts in the future, not the choices that you make now, you know what I'm saying? Because back in the day, if I had two policies around in my 20s, I actually let the policies lap and I didn't care because my whole thing was, yeah, they were cheap policies. They're gonna always be cheap like this. Like I was paying $15 for like a $50,000 whole life insurance. I think it was like 15 or $13, something like that, for a whole life. And I was like, oh, I get another one. Like I took it for granted, even with a lot of policies. So now that I'm educated and learning more about policies, you know, I kind of kick myself in the butt. But the thing about it is I'm changing it now with my future goals to where that's why I'm getting the policies now to implement to help me with my future goals.
beautiful, beautiful. Kareem has a question. He says, how many policies can you have at once? Which is a great question, Kareem. So the answer to that is actually unlimited. There is no limit to the amount of policies you can have. What there is the insurance company would check your financial suitability. In the state of New York, we have a law called Regulation 187, which is where a financial professional like myself would actually find out about your finances before you were to apply for the policy to see if you're overinsured, underinsured, or if you can even afford to pay for all this insurance. I hope that answers your question.
Yeah, because I have 3 policies now. So
And to further that question, on average, the wealthy tend to have at least 7 policies on one life. So again, here we are. And again, not all life insurance is the same. And the reason is because each type of policy is going to have a different bell and whistle. So what we were looking at here, myself and she, we were looking at, let me share the screen one more time. We were looking at an indexed universal life. Okay. Now, this is probably one of the more robust types of policies. But if you look here, you know, I have whole life and term. Variable life, I don't mess with variable life too much because a variable life is literally playing the stock market. So unlike an indexed universal life, a variable universal life, your death benefit and the monies that you pay can fluctuate in the stock market. So if the stock market goes to zero, your life insurance goes to zero, and you still have to pay premiums. There is something called disability income insurance, which is not a life insurance policy, it's a health insurance policy. And then you have things like annuities, okay? Annuities are IRAs, or individual retirement annuities or accounts. Pardon me here. So in California, we have 2 types of annuities. We have an indexed annuity, and we have an immediate annuity. Okay, so remember, actually, you know what? I'm gonna do it like this. What was that? That was 4 million, right? 10,000 cost basis. No, I don't want a 40 million cost basis. We'll leave it. Well, it's gonna go at 40 million. There we go. Okay, and we're gonna do this 0. Okay, now let's imagine LeBron James Jr. dropped in that $4 million one time in a single premium into that annuity. Remember, that's the retirement account. So I told you can take your life insurance and use it as a retirement account. So there's so many things you can do with life insurance. Okay, so this is a retirement account or an annuity. And if you'll notice here, let's see what the distributions are. And this is also tied to the S&P. Interest credit. Where's our payment? Accumulation, boom, 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 8%. Actually, I'm gonna do this on a single premium because this one is building, so it's not gonna tell us exactly. It's on an 8% guide. So you're about $5,000 a month until the date of death. Okay. Let me see something. Yeah, my brother always looking out for me, man. He ain't never gonna let me slip. I love that. Now, if you'll notice here, this is why it says an index 7. So you have a 7-year surrender charge schedule. So if you do any surrenders in the first 7 years, you'll see it's almost an 8% penalty. Then it goes to a 7%, 6, 5, 4, 3, and then 8 plus you get a 0% penalty for surrendering the annuity. Now, this is an index growth annuity. The reason it's not showing payout is because he's 30. So you can't get a payout until you're 59 and a half. So now if I put this in an immediate annuity, oh shit. Okay. So if I put this in immediate annuity, which is one that is an immediate annuity, means that when you put the money in between 30 days and 12 months, the insurance company starts giving you a check. Okay. So if you look at this, if you put that $4 million in, basically you're going to get tax-free. Well, you get $7,700 a month, but tax-free, you'd get $6,300 a month until the day you die. The beauty of this is, now, don't worry about this life expectancy, 52.2 years. They're basically saying if he had an annuity today, an immediate annuity, which he wouldn't be able to receive because he'd be facing tax consequences, but they're basically saying that likely a 30-year-old black male is going to live till about 82 and a half. So they've already got that calculated. Okay. So if he lives to 82 and a half, all this money is what would be spent, $4.8 million, even though he only put $4 million. If he lives to 82 from 30, being paid immediately, this immediate annuity, he would actually have reached $4.8 million. So this is a constant income that even when you go through the money that you spent, unlike a 401k, which is period certain, which like it says total certain payments, this is in lifetime income. So this doesn't stop until the day that you die. Okay. So, you know, I love that. And again, it's a life insurance policy, but you know, it's really a retirement account. That's why when you go to the bank, they call it an IRA. But if you're going to buy an IRA, don't go to the bank, go to an insurance agent. Obviously, me being up here, I want everyone to come to me, but the reality is if you have an agent you're comfortable working with, work with them. The important thing is to get the proper coverage. So lastly, before I wrap up, She, do you have anything else you want to say?
No, I'm good, man.
All right, wonderful. So I want to tell everybody, you know, like I said, we're going to be doing this a lot more. I'm definitely enjoying making it interactive. She, thank you for coming on, brother. I think that, oh, you know what I didn't do? Hold up. Now I got to start my whole thing over for an hour. I didn't put my banner up there to show people how to support. So if you'll see, you can go to my company website, cgwealth.financial. I am an independent agent. That's why you see ADH Wealth Solutions on my IG and on my Facebook. But I did get absorbed by a larger company. And I have no shame in that. The larger company had more money than I do. And it was either struggle and die or get assimilated. So I got assimilated. But with that being said, I always want to say peace and Black power and Black Lives Matter. I'm going to, as usual, end this off with a little tunes. So peace, Black Power, Black Lives Matter, one love. I'm out.
Our goal is to break the power of the mob in America and nothing short of it. We will end their profits, imprison their members, and cripple their organization. Imprison their members and cripple their organization. Cripple their organization. Imprison their members. Our goal, break the power of the mob